Back to a full trading week. Welcome to Market Day Report. I'm Tony. Thanks for allowing us to be a part of your morning and starting your week. Again, a full trading week, 5 full days of trading, and we're set to start in about 15 minutes. But what about the overnight session? What did we see? Let's start with the corn market. Sell off there, 12.5 lower on the new crop December, slipping down to 424.5. Soybean trade doing the same thing, off 21 3/4 at 1027.5 on the November. What about soy? Let's hit soy meal and soy oil and just see, yes, soy meal contracts in the overnight session were lower. Soy oil lower, but notice the 53s across that board, starting with the August at 53.79. Now over to the wheat market. We'll hit Chicago first, and the September 12.25 lower, 544.5. Hard red September, the most active, 524.5, down 11.5, and the cotton market December at 67.86, off 60. Let's go to Springfield, Missouri. President, Midwest Market Solutions, Brian Hoops. All right, Brian, starting a new week, but what catches your eye?
Yeah, good morning, Tony. Hope you had a great weekend and everyone else as well. Coming out of this long weekend, we had a gap lower last night in the grain market. So corn, soybeans, wheat, all gapping and falling sharply. President Trump's announcement in Des Moines that we had talked about last week did not contain any type of a trade agreement that had been rumored. Market rallied late last week, anticipating he would say something about China or some sort of a historic trade agreement. Nothing was said. That was a disappointment to the trade. And combine that with a little bit cooler temperatures, wetter forecast, all the way out until about July the 16th, it's going to put pressure against these grain markets. In fact, it's estimated about 50% of the nation's corn crop will be pollinated by July the 20th, and we have really ideal conditions till at least the 16th on our forecast map. So we gap lower, continue to push lower overnight. The expectations are for crop progress numbers this afternoon to be high, an improvement of 1 to 2% again in corn and soybeans. Maybe we can come back and fill some of these gaps at some point during the session today, but I imagine there'll be quite a bit of selling pressure if we can get back into those areas, just from the trade wanting to get short in here. The funds are already short, so that helps a little bit that they're not piling out of longs and trying to get short. That'll take away some of the selling pressure. We did have a private export sale announcement this morning as well. 135,000 corn sold to Mexico. Coming up on Friday, at the end of the week, we have a supply and demand report for July. That's at 11 o'clock. Haven't seen the trade estimates yet. They'll be out in the next day or two. But I would certainly suspect with the strong corn export sales pace that they raise corn exports again and tighten up the balance sheets a little bit. But that may have very little impact on the trade, as it's really going to be focused on whether and how big this crop may actually turn out to be.
Yeah, I'm glad you brought up that WASDE report, which comes out on Friday, and obviously that will be something we start zoning in on here pretty quick. Okay, Brian, hang on. We'll take a break, come back in a moment, talk livestock futures. Market Day Report continues in a moment. Let's talk cash cattle for a moment. It was a busy trade week last week as packers ended up buying in the South 224 to 225. Now in the North, it was 230 to 232 mostly, though some topping out at 234. And then the dress trade, 368 to 370, with some as high as 372. So pretty much even money week over week. What about the livestock markets and the cattle market? How did we settle? Well, look at the October contract there at 210.90. The August, again, the last trade we had on the August, 214.05, and that was on Thursday. So long weekend, no overnight trade in live cattle. Now over to feeder cattle and feeder. The August contract 309.50 and the September at 309.37, and that's where we'll start the trade. in about 8.5 minutes. Over to the hog market. What happened with hogs? Well, August contract at 106.10, and then you see the 92 on October. We'll keep an eye on the hog market this week. All right, let's bring back in Brian Hoops, Midwest Market Solutions. Kind of interesting as we now really get into the trade here in July. What are your thoughts?
Yeah, we did have a cash cattle trade, I think better than expected by the end of the week. Earlier in the week, it was a little bit softer, but really firmed up Wednesday and Thursday. And it sets a tone for higher cash trade this week, at least steady to higher. Packers are into a full kill mode here into the end of the month. They have positive margins. That's going to hurt our cutout values, but for a while here, I think they can pay up in the cash markets. They may have to secure their inventory. So our demand's likely to start to soften a little bit. Now we're past 4th of July. We don't really have another big grilling holiday until you get to Labor Day in September. So next couple months in here could be a little bit soft as far as demand goes. Supplies we know are going to remain tight. Unlikely we'll go back up and challenge those spring, summer highs, but we could have rallies and certainly should have some rally attempts again, certainly like we saw to end the week last week. Hog market under some heavy selling pressure. I imagine that'll continue to be the case. The hog market looks to be very top heavy to me. It looked like it had changed its trend last week and then had a little bit of a retracement rally on Wednesday with a sharp down move on Thursday of last week. So calls right now, we're hearing cash should be a little bit better in the country this week in the cattle country.
All right. Brian Hoops is with Midwest Market Solutions. Great to see you, Brian, and welcome back.